If you are between the ages of 35 and 55, I think that right now is probably the best time for you to further your education when it comes to trading, further your education when it comes to risk management and how to manage your trading plan, and learning how to trade the markets in a way that's going to add an additional income to your bottom line or replace your 9-to-5 income, or be on the right path to kind of securing that extra profit. So maybe you can pay a bill here, take an extra vacation, put a little money to the side for a college fund, put a little bit of money to the side for a rainy day. Because in fact, it's not the young 18, 20, 25-year-old, 30-year-old traders even who need to hear this. It's the people who are a little bit more aged, a little bit more experienced when it comes to life, that you can kind of understand that, shit's not easy, right? Life's not easy. We're going to go through ups. We're going to go through downs, versus the mentality of an 18 through 30-year-old is a little bit more loosey-goosey, right? I've got a 9-to-5. I can just throw some money at a prop firm account evaluation. I can throw a little bit of money here. If I lose it, so what? I'll go ahead and gamble and oversize and over risk. They haven't really made too much money yet. They don't really have enough life experiences. Now, that's not a knock to anyone who is under the age of 30, because I think that if you are getting into the markets under the age of 30, you definitely have a lot more years to kind of develop, and you will get there. I'm speaking to everyone right now between the ages of 35 to 55. I believe that if you do want to be a successful trader, the first thing that you need to understand is obviously yourself. You need to understand your emotions and your emotional attachment to money. The second thing is to get around a community, a group of people, a coach, a mentor, a trading buddy, somebody who can kind of keep you on the straight and narrow. Because a lot of times when we get to this certain age, now again, I'm in this age bracket as well, over 35 to that 55 age bracket. As soon as we kind of get into this type of age, we get stuck in our own heads. We've been doing certain things for a long time. We don't want to give it up. We're a little bit more stubborn. We're a little bit more tight to the vest when it comes to our money. We treat it a little bit more serious. We understand that, money does not grow on trees, obviously, but we also understand that there's an opportunity in the markets, especially if you're a futures trader, especially if you're an options trader. There's an opportunity in the markets. If you do understand what you're doing, you can make a lot of money extremely quickly in a very minimal amount of time. See, trading is one of the only industries where if you want to make more money, it doesn't necessarily require you to spend more time on the job. All it requires is more money and larger position sizing. But before we get to increasing our position sizing to where we can make those $500 trades, $2,000 trades, $5,000 trades, we have to understand how to make $50 a trade, $100 a trade, $200 a trade. So I try to set up in Evolution Traders a little bit of an exercise where I size people down all the way to 1 or 2 micro contracts using a 1-to-1 risk to reward ratio, staying on the right side of the trend, having a community where you can ask questions or talk to me in real time so we can do some live trading together. We can schedule one-on-one coaching calls. We can do all of it, right? Because I think that having someone to learn from, and it doesn't have to be me, it could be anyone, but having a community, like a brotherhood, right? A sisterhood, so to say, if you're a female, obviously, to have people with experience who are doing the same thing as you. You know firsthand that it's very, very difficult to go at things alone. Sure, you're going to be able to figure things out. You're going to learn on your own, but the amount of time that it's going to take can really be cut down in half if you allow yourself the education and allow yourself to make the changes to be able to be on the right side of the market. I'm going to give you guys a quick scenario here. Obviously, the market opened up green today, pulled back a little bit, consolidated, put in a new high, pulled back a little bit, consolidated, put in a new high, and the market has been going sideways for about 3 hours. Now, if you are new or if you really don't understand the markets yet and you haven't really caught your bearings yet, then you could have took a trade here short because you felt the market was overextended and then got stopped out and could have went back long here and made a little bit of money and then gave it all back and got stopped out, and then told yourself, well, this time it's going to go down, and take another short position and now get stopped out. Versus being able to have the luxury to ask a community, ask a coach, ask a mentor, hey, what do you think that we should do in this market? Should I be putting on full size? If I was asked a question right now, should I be putting on full size or should I be putting on half size? The answer would be definitely half size. You want to minimize your risk when the market is ranging. Again, now, what side are you going to look to be on when we do break out? Well, whatever side we break out to. If we do lose the bottom of this range here, I'm definitely going to want to be on the short side of things, and I can go back to my normal position sizing. If we do break above this range, I want to go back to full sizing and I want to be on the long side of things. Unless you're a range bound trader, one thing that needs to be understood and identified is that even if you have a particular strategy that's giving you an entry for a short here, or a strategy that's giving you a long here, another long here, another short here, the best thing to probably do is to probably not take any of those trades, right? Because what are the probabilities that this trade's going to work for a full 1-to-1? Or here when the market is ranging, right? So this, if you're looking for 20 points, the market can go, 10 points and then reverse. Why would you want to put yourself in that situation to potentially take a million paper cuts just for the sake of taking trades and trying to make money? Where you want to make money is here on the big pullbacks. You want to get in when you get a fresh setup, when the market is trending higher. When the market is consolidating, you want to use a top and you want to short back down into support here. You don't want to take a short position here when the market is making a higher low. What you want to do is take the reclaim of the trend that we're currently on, and you want to sell into the new highs. When we're starting to consolidate again, what do you want to do? You want to see the breakout over the new high of day and use the low swing, right? The previous swing low as a stop. You also have a 20 SMA support here. So you want to be on the right side of the market. Now, a lot of times, traders are all over the place, right? A trader is trying to short the market because it's pulling back, trying to buy long just because the market gave a big green candle, taking longs here, taking shorts here, taking longs here, taking shorts here, taking longs here, taking shorts here, when realistically the market's not doing anything. So until we lose a swing low, so notice this, how much we're ranging here, right? Notice how much we're ranging. Look at when we were ranging prior, right? What did I say about 2 minutes ago? Where do you want to be? You want to be on the side of the trade when we break the range. So notice the range. Where do you want to be? On the side that breaks the range. That's when you go back to normal position sizing. You want to stay out of the range. Stay out of the range until we break through or break above. Then you're taking profits at support, holding a runner to see if we continue to break down, and then you're covering on the way down, hopefully at that 1-to-1 or 2R trade. When we reclaim an area of support, you want to get back on the side of the trend. Now you can use a couple of areas as support. For stop losses, you can use the prior swing low on this long, or you can use a 1-bar stop. Whatever you're comfortable with, and whatever you're comfortable with has to determine what your account size is and how many contracts are you playing. Right? So if you're going to give up 30 points, do you want to go play 10 contracts? No. Maybe you want to play 5. If you normally play 5, maybe you want to play 2. And normally if you play 2, maybe you want to play 1. But you wouldn't know that if you've never experienced it. And that's the thing. When you don't have the right education, when you don't have the right mentor, the right coach, the right community, guys. I started Evolution Traders 4 years ago for a community. It started off as an online journal for myself. And over time, I would make YouTube videos like I'm making now for a reflection on myself and the market, so I can go back and use it as a diary, as a journal, to kind of see, what do I see after the market is closed? What am I looking at when the market is open versus after the market closed? And how do I feel when the market is open and when the market is closed, right? Because a lot of times we have all of these emotions that are running through us when the market is open, but it's a lot easier to see things in clarity when the market is closed. So what I do is I take these videos, I rewatch them, I make myself speak out loud so I can learn from them. Again, I hope you guys enjoyed this video. If you do enjoy this video, make sure to join Evolution Traders down in the description box below. Also, like, comment, and subscribe, and I'll catch all of you guys on the next video.